Good morning, Predicted Trades family. Hope we're all doing well. Another exciting day on the market. For a quick review, hey, good morning, Pine Web. Thank you for the reminder, folks. Appreciate if you hit the like button if you enjoy these preps. So a quick review of yesterday. We had a little slip into open. We quickly reached up and tagged that daily 8, daily 15, and rejected, setting up the short down to 37.73. I talked about in prep yesterday that as long as we can hold 37.73, we can see continuation of this uptrend to get up to the daily 50, and that's what we got, although it took all morning to kind of set up. Basically all morning we were in a wedge, but we repeatedly held 37.73 and set higher lows. That allowed us to break out of that wedge to the upside in the afternoon. And we talked about at the first bounce that we could push up early to the daily 50, but we could also just wedge, and that's what we got all morning long. But overall, our key targets, like the 377, 378 call on SPY, held its beast zone all morning and gave one last final tap of the beast zone and on this test around noon before taking off and printing like a triple or almost a quadruple. Just point being, the setup never broke down. We never lost our key level and we never gave out beast. So you just keep taking shots at that off of our beast levels. And it ended up working out great. We actually closed above the daily 50. You can see overnight we dipped back and tested it. And the daily 8 and 15. That made a zone of support. And we pushed right back up to new highs over yesterday, pre-market. So for today, the premise will be very similar. If we can continue to hold this trend line, meaning on any dips, as long as we stay above our pre-market low, we are holding the structure of this uptrend. We need to recognize trend when it's forming and try not to fight the trend. And yeah, there were definitely little scalps shorting back to the bottom of that trend line yesterday. But overall, the main trend is up, and those scalps, provided good returns, but they were, maybe only a double, whereas the calls at the end of the day went well over a double, triple, quadruple, yada yada. So for today, as long as we can hold above that pre-market low on any pullbacks, we are maintaining this uptrend. If we do start to lose that pre-market low and this trend line, we do still have support at the daily 21 and daily in this 37.73. They are making a zone of support where basically all of this consolidation, we have buyers waiting. So just because we break the uptrend, or maybe even go sideways slowly through it, we do still have support where we just got picked up yesterday. Now, should that give out, then we're talking about a potential change of trend back down to retest key levels below. We do have a 4-hour squeeze, which basically spans up near our next key level around 38.40, 38.43, 38.37, right? Right now, that's kind of our resistance to take out above. And the bottom of that 4-hour squeeze is right back at that 37.08 key level that we held on Friday. We held it pre-market and we held above it at the lows during the cash session. So, should we start to give out 37.73 today or tomorrow, then we could be talking about revisiting 3741, 3708. But as long as we hold above the daily mean, above that 3773, and even above this 3800 pre-market low, we should be looking for continuation plays to the upside to keep testing resistance and pushing higher. If we look back, we have not completely engulfed the drop from FOMC, so we clearly have some targets to the upside to still take out. So we just have to see if this uptrend can continue and get us to those targets for a test. Overall, if we kind of mark that high from the previous day and this high from FOMC, we're coming into a wedge. So this 3840 is going to be strong resistance. And we have to see if we just can't get through that, are we going to come back down and give out the bottom of this wedge to retest these levels? So, as boring as yesterday kind of was with the wedge in the morning and then ramp afternoon, we talked about it all day in the room. We're just holding in the wedge, play the top of that range, the bottom of that range back and forth. It looks like it'll break out to the upside, and that's what we got, although we just had to wait all day for it to happen. Today is going to potentially be similar. We are in a wedge. We'll want to play that range back and forth until it keeps breaking higher or rolls over to retest yesterday's levels. So pretty simple premise for today. But before I get going too far, let's just, as we do every day, review our economic calendar, even though we really don't have much going on today or tomorrow. The big event is Thursday with CPI. Today we basically have nothing. Tomorrow we basically have nothing, a little bit coming out at 10 a.m. And then Thursday we have our CPI, Consumer Price Index, and some jobless claims, as always on Thursdays, and then some Fed speakers throughout the day. So we have to think CPI really big, going to give us some inflation numbers. We'll have some jobs data, and then all day long we have Fed speakers that might say little tidbits about those inflation numbers. Basically just meaning Thursday could get pretty volatile. Friday we have University of Michigan study that comes out with some more inflation numbers. And just looking forward to next week, we have a little more inflation expectations on Monday. We've got some PPI and manufacturing data Tuesday, some retail sales, import price index, jobless claims as usual, and home sales. Yeah, some homes data. Basically next week is pretty light. All of this stuff is, definitely important information. Retail sales might be kind of the biggest mover and shaker of the week. But overall, we have a light week next week going into an OPEX week, right? We'll have options expirations expiring next Friday, so we'll have to see. If CPI doesn't tank us, we could see some sideways action next week with the OPEX. But let's just stay with the current price action. We've got our levels above if we can keep pushing. We've got our levels below if we start to break down. So we're ready for the day. Let's get our stuff back up here. And before I move on from ES, I always like to check back in on our moving averages, our 45 EMA from all of our time frames. As you can see, yesterday I talked about how we were coming up to that 4 hour, this kind of flatter blue line, And we had our moving averages all sitting near that 37.73. That's what lent to my thesis that as long as we can hold 37.73, we are contained within our moving averages and we can try to push over the 4-hour and head higher, which would drag our lower time frame intraday moving averages up to cross over that 4-hour. Now we are pretty much getting that. We've got the 15 and 30 minute above the 4-hour, meaning that we could take a dip, test this 38.07, and we would be holding our 30 minute and 15 minute little cloud, you could say, or little, grouped EMAs. We held them overnight. So we could have a dip to 38.07, testing that 30-minute MA, catch a bounce there, and keep heading higher. Basically just meaning on a 15 and 30-minute time frame, we're holding moving averages and bouncing. Those moving averages reach down to about 37.96. So, like I said, we could get down, wick outside of this trend line, tap these moving averages. As long as we're staying above them, we're still quite bullish on this uptrend. If we start to lose that 37.95, that'll be your first sign that we are losing our buyers, our strength, our momentum. And we could dip down to retest that daily 21, 37.88, and the level we held yesterday, 37.73. Where again, we could catch a bounce and continue this uptrend, right? We made it back above the daily 50 and above our moving averages, which are all stacked together. We could still dip down and retest in between these moving averages before heading higher or before breaking down. So all things to keep in mind today. Now let's move on to NQ. On NQ yesterday, I believe my thesis was as long as we can hold that overnight low at 10,800-ish, we would be good to keep going to the upside. We actually held above that, pretty much right at our daily Keltner here, at 10,850. Another reason that we track those daily Keltners intraday, sometimes when you don't have levels, those can be what we're settling at. So, NQ held that daily Keltner, kept on trucking up, back above 11,000, and closed above that. You can see we dipped down to about that 950 key level, but we're about to open above that 11,000. So, you can probably guess, I'm going to say as long as we can hold about 11,000, we're holding our trend lines from yesterday's low, overnight low. Our handy dandy trend tool is plotting that for us on the 30-minute time frame. As long as we can hold above that trend line, we can keep pushing up into this 4-hour squeeze top and try to head higher. We start to give out that trend line, we're coming back to test this zone that we're basically wedging around. And we could still hold this zone, catch another bounce back up. If we can get some continuation to the upside, we do have the daily 21, daily 15 sitting right up at our next big key zone. It's usually no coincidence that these moving averages arrive right at our key levels as we are coming to test them. So, if we can get going over 11,100, looking up to get to that 200 to test the daily 21, daily 15, and past that the daily 50 sits way up at our next key level of 11,500. Not saying we get there today, but if we can start to clear and get above the daily mean, that's the next target. And I know you might be thinking, Oh, well, there's a few hundred points in between those targets. Well, I try to mark and track the big key levels, right? Not every single level in between. Overall, we couldn't get to that 11,500. We sold back to each key level where we settle, arrive at the next. You can basically see that each key level has been the destination, the pivot point where we reverse. So that's why I track the levels I track. Yeah, that's pretty much it for NQ. On to Ready. Ready, I do need to update the levels here, just to add a few more, I will say that. But, Ready, overall yesterday held that daily 15, trucking higher. Pretty much if we can hold that overnight low and that daily 8, looking forward to keep going to get up to this first daily Keltner around the top of our squeezes. Squeezes getting very thick and stacked. We now have a 4 hour that's nice and tight with a thick cloud, meaning that we can push up into this, but we're going to keep rejecting it until it opens up and gets thinner. But if we can keep trucking, looking to get to that daily Keltner above, and if we can push higher still this week, 1850, 1870, where we sold off from on the Ready. And just like we did on ES, we should mark this just to say, as we're arriving up to this daily Keltner, we're going to be dealing with trend lines from those two highs and basically in a wedge. Bottom of that wedge back at the daily 21 and bottom of the 2 hour squeeze. Top of that wedge just outside of all of our squeeze tops. YM. YM definitely the strongest of the indices, pretty much arriving back near where we sold off from on FOMC. Looks like it has fired its 4 hour squeeze, so still remaining strong. If we can keep going to the upside, we've got this psych level of 33,000. And what is that? Our second Keltner to the upside, right near that high that we rejected from FOMC. And if we just look further as to, YM getting to the third Keltner, it's way up here above 33,500. Just looking because third Keltner is when we start to get a little overbought on anything. So we might, if, I'm not saying YM gets there today, but saying if we do keep trucking higher on YM, take out this FOMC high, the targets are going to be 38,500 and 720, but then we're getting overbought, and YM might have to take a break, and other things like NQ, which has been lagging, might get some rotation into it. But we'd still have to take out all of these highs from FOMC, and we're getting close to them. So we want to keep that in mind today. 33,000 to 33,100, going to have some resistance there. So we could see YM start to take a little bit of a break. If it starts to get below that pre-market low, then we might be talking about a drift back to 32,500, 600. Apple. Apple did a decent job holding above 136 all morning, and then ramped back up to our 138, 138.8 towards the end of the day. If it can continue to hold that, let's get a little bit more like this. There we go. If we can continue to hold above this zone 138, which is what we rejected in the morning, and this 138.8, which we've held overnight. If we can continue to hold that zone on any pullbacks, looking for Apple to continue over 140 to 141, up near the top of this 4-hour squeeze. No, sorry, 2-hour squeeze, yep. And if we can clear 141, looking to get up to this daily 8 and back to our zone above at 144.5, 145. Looks like the daily 21 is going to probably be stepping down right in that zone today. So on Apple, as long as we can hold above this zone, we might just get a reversion to the mean, to the upside. We start to give out this zone, it's back to 136, 135, and if it keeps slipping, this 132, 133. AMD. AMD continuing its upward battle to get through this daily squeeze top. And like I've been saying, overall goal is to get back to that 65, 65 and a half. We're almost there pre-market. So AMD might just make one good push up there and start a drift back. I'd say as long as it can hold above 62, 62 and a half, it's going to keep trying to trudge higher. Overall goals that 65 and a half and 68, where that second Keltner the upside sits and the daily 50 sit. But we do have a tight daily squeeze here. You know, we have to keep pushing against it to get thinner. You know, they start thin, they get thick. We push against one side and they get thinner, and then they disappear and we're firing. So let's see today if it can step up, maybe start to get a little thinner, and we can keep pushing through. Amazon. Amazon. You know, been struggling with this 91, but looking like we're going to open right near it. Amazon could start to make a move off this 91. Not saying it happens today, but if tech can continue to push higher, Amazon could move off this 91, try to push back to 95, where the top of that 4-hour squeeze, that daily Keltner sit, second Keltner to the downside. Our moving averages are way above because Amazon's been getting crushed, and as you can see, has been getting below that third Keltner to the downside. If it can now scoop back up off this 91, there will be all these trapped sellers and folks that took position to the upside right below that 91. So we at least have a good amount of consolidation down here to try to push off of to the upside now. But those are the key levels to look out for. We clearly do have this big 2-hour squeeze that we'd have to start pushing against to head higher. BA. BA continuing to remain strong. Yesterday pushed up to 166. Looking like we might be opening near it. Next big key level to the upside is that 169, 170 zone. If we're going to keep trucking and taking out yesterday's high. But we are getting to that third Keltner to the upside, where we start to get a little overbought. So let's see if BA wants to come up and hit this 170, getting outside of being that overbought range, and then reject and come back. Let's see if we can hold this zone today now that we are above it. If we start to lose this zone, we're talking about coming back to 160 where the daily 200 sits. And if we give out 160 at 159, coming back to that 154, which used to kind of be the resistance before breaking through on this uptrend. Cap. Man, also remaining strong, almost up to 230. So as you can see, coming up to this key level, 227.9, 230, big psych level. We are past that third Keltner. Can she keep trucking? Yep. I mean, the next big key target I have is 246. But since she's getting above that third Keltner, it might be time for a break. And as you can see, we've hit a big key level that we've started to reject. And yes, we're pushing against it and printing above it. But the more that we keep rejecting and having big drops off of this level, the more likely it is we are going to come back to retest the daily 8 where that second Keltner sits, and this key level where that first Keltner has almost arrived to. So definitely want to keep an eye on these things that have been leading to the upside and are getting a little overbought. Because when they start taking a break, we need to see rotation into other things that are weak, like tech. Because when leaders start to take the break and weak names are not coming up and they start to drop as well, and that means the whole market is likely going to come back. Coin. Not the prettiest chart. It's had its earnings, started to look strong, coming right back. It's at the bottom of daily squeezes where we should start to see it bouncing, but it keeps remaining underneath, let's say, a trend line. There we go. And coming kind of into a wedge here. So today, or this week, if we can get above 58 and 60, we are breaking through this trend line and could start to make a good recovery. So not loving this one, not going to stare at it, but maybe just mark that once we get over 59 and 60, we could start to see a push back up. Google. So just like we saw on Amazon, Google got down below a key level near third Keltner, sat there for a while, and has been scooping back up. Kind of going sideways through this sell-off from earnings. So we are at least starting to see some uptrend and the potential to scoop back up for a reversion to the mean. If we can get above this 89, 89 and a half, we'll be getting back to the daily 8, and if we can hold there, it could start making a nice push back above 90 to this zone that we sold off from at FOMC near 91, 92, and back to the daily 21, which is slowly catching up to about this 94. Let's see if XLC and Google are going to try to get a full reversion of the mean off of this third Keltner that we were hitting on Thursday and Friday to get back to the mean up above. GS. Man, just still trucking. 363, up above third Keltner. If we start to come back and lose 360, 357 and a half, where we sold off from on FOMC. If we start to lose those two, likely coming back to the daily 8 and the second Keltner around 350. If we can stay above that 357.5, 360, let's just see where she wants to keep trucking up to get to. Next big key level, 365, 370. JPM, kind of the same, up near that third Keltner. If it starts to give out 130, where we topped out at FOMC, then we'll talk about coming back for reversions to the mean and key levels. Meta. Ooh. So, we are starting to see a slight uptrend in XLC. Meta getting back above 95. See if we can hold 95, get through 100, and then we might be talking about a reversion to the mean, which sits up at that 113 key level. If it rejects 100 in this daily 8, then it's coming back to settle. Microsoft. Microsoft was nice and strong yesterday, tried to lead to the upside. The market was wedging, this was pushing, had a little pullback off that daily 8, held this, key to 222.5, and then kept going for more. So very strong bounce in Microsoft off of all these key levels and that 2-day squeeze bottom, and almost back to the mean, which sits at about that 232 key level. So if we can keep going to the upside today, want to clear 230, get back to 232 and the daily 21 for reversion to the mean. And if she can keep trucking this week, back up to that daily 50, which sits near 240, 241. The same levels we've been playing for weeks on Microsoft. But nice strong name. If we come back and start to lose that pre-market low at 227-ish, then we could be coming back to that 225, 222.5 to settle. Netflix. So, you can see big key levels. We got up to a big key fib level of retracement in that gap fill. We came back near the bottom of that gap fill to another big key fib level, and we held yesterday. So we could see Netflix try to stage another rally back up to 300, and where we sold off from. Got to keep an eye around this 252, 250, as long as we can keep holding there. We can try to push back to the daily 21 that sits above at 265, up to the daily 15 at 278, and if we can clear these moving averages, then she might try to make a push back to 300. And mark your trend line from this sell-off. I grab right about there. Oh, come on. There we go. If we can start to get through that trend line, then she might start to really push back to these moving averages above. If not, and we're rejecting, then we're going to retest this 252, 250 zone of support. NVIDIA. Oh man, NVIDIA. So strong. Getting up above this 2-day squeeze. We'll have to see it open if it's still intact or if it is going to be firing. Getting back to this 147.27 key fib level. If it can keep trucking, 150, 150, 275, where that third Keltner sits to the upside. If we start to reject this level and come back, downside targets, 144 and 140, where we went up from yesterday. But man, Vidi, from last Thursday at the daily 21, almost up to third Keltner. Made a nice push. I know a number of people in the room were hitting this last week and into this week. Hopefully you held a little bit of those calls from yesterday and swung them. QQQ. Moving nicely off of that 260 and knocking on the door of 270 at the top of this 4-hour squeeze. If we can clear 270, looking to get back to this 272, 273, where the daily 21 sits. And if she can keep trucking past that, we're looking to get back to where we sold off from at FOMC, 277.5. And back to 280, where that daily 50 sits. If we start to reject 270, likely coming back to pre-market lows around 266.5 and 265 psych level at the bottom of this uptrend. And you might notice with some of my trend lines, I'll leave candles out of that consideration because we can get extreme price action, but then a trend still starts to form. So that's why I marked pre-market levels to pre-market levels, because you can see yesterday we held, and then pushed higher. So let's see if this journey up can continue. SPX. So yesterday held near that daily 21 and pushed up to that key level at 38.15. Back above the daily 50, so on any pullbacks, let's see if the daily 50, daily 8 can hold us up at 37.90, 3800. And if we can keep going to the upside, looking to get back to 38.50, where that first Keltner sits. 38.90, where we sold off from at FOMC, and 3900, and basically these recent highs if we can continue to the upside. If we start to lose that daily 50, likely coming back to retest the daily 21 and consolidate at these daily moving averages. Oh, SPY. Got down to 370, held. Yesterday, only got, about to that 375, held that daily 21, pushed up above the daily 50. Arriving back at that 381.5 this morning. On any dips, let's see if that daily 50 can hold us up at 379, psych level 380. With the goal of continuing to push through this zone. If we can get above 383, we are clearing this zone, and the target would be the zone above, where we sold off from on FOMC. But if we start to reject and lose that 380, 379, likely coming back to the daily 21, again to settle at these daily moving averages, which span from about 376.5 up to that 379. Tesla. Real quick, I want to check in on Square just to see. Yeah, it's still in a nice rising wedge after its earnings report, but daily squeeze holding it back. Wouldn't be surprised if we start to lose this rising wedge. If we get below 62 and 61, then we might have a reversion to the mean to the bottom of this 4-hour squeeze before trying to press higher. Yeah, something to keep an eye on. Might be a little dump in Square to get back to moving averages and squeeze bottom, before pushing through this big, thick daily squeeze top. Tesla. So Tesla, a little weaker yesterday, obviously. While some names like Microsoft were pushing up all day, Tesla just dumped to 200 and slipped a little further overnight into this daily squeeze. I think I saw that there's a potential that since Friday, Elon has been selling a little. And so, other investors are doing the same to take it down to key levels. Next key levels I have below are basically around this 190 and a half, 190, let's call it. If we can, if we keep slipping and we can start to base there, looking for it to get back up to 200 and start the journey back up to key levels above. If we just keep slipping and give out this daily squeeze, next key level below, near that 180, and that third Keltner to the downside near 184, 185-ish. So, pretty simple, every 5 points is kind of a key level at this point on Tesla. So let's see if she can start to settle and come back up. And like I've said with some of the names that have been pushing hard and are above their third Keltner, when those things start to take a break, we need to see the things that have been weak start to take back off to the upside for a healthy rotation. Otherwise, if names that are weak start dropping while names that are strong start dropping, we're going to see the whole market start to slip. UVXY. So UVXY yesterday stayed under 9.5, started that slip back down, did not quite make it to 9. So for continued upside, we want to see UVXY stay below that 9.5. Stay below these pre-market highs and continue the journey down to 9 and maybe even that 8.8 where the third Keltner, the downside, sits. If we're going to see some rejection in the market and roll back over, we'll see UVXY get above 9.5 and start to make the journey up to 9.75 and 10 where that daily 8 sits. VIX. Living life below 25. Got below it early yesterday and kept rejecting 25 around noon. That was a big key sign that we can continue to the upside, and this can stay under 25 and keep slipping lower. Just like UVXY, we're not quite down to the lows from Friday yet. So for continued upside, want to see VIX stay below pre-market highs, 24.75, keep trucking down to 24, and ultimately get down to this 23.3, 23, where the bottom of the 2-day squeeze sits. But if we're going to roll back over, we'll see VIX get above that 24.75, back above 25, and try to make the way up to the daily 8 around 25.5. So that's it for today. Hopefully this was helpful for everybody. Looks like we're setting new pre-market highs. So let's see if we get a little dip to retest some MAs, maybe fill the gap before we keep trudging higher, or if we're just going to gap and keep going to the top of this 4-hour squeeze and higher. So that's it for today. Thanks for tuning in. Good luck, everybody, and we'll see you in the chat.